NIO just had the best quarter to date, in which it had reported a revenue of 4.5 billion RMB or $666.6 million for the third quarter ended September 30, 2020, beating analyst estimates of $663.29 million for the total delivery of 12,206 from July to September 2020. Meanwhile, vehicle margin is 14.5% compared to negative 6.8% a year ago of the same period. Good news as well that its gross margin is 12.9% against analyst expectation of 12.25%. Meanwhile, adjusted and diluted net loss per American Depository Shares is negative 0.12 cents, enough or good enough to analyst consensus estimate of negative 17 cents. However, the stock is down after market while trading flat intraday on November 18, 2020, trading to as low as $42.5 through, although it climbs hard to close at $45.09. This stock is showing again its volatility, continuing its trend to sell off on every earnings. Which reasons this time might include on Tesla's announcement to S&P 500 inclusion, while last week short sellers attacked downgrading the stock to $25, and the listing issue of Chinese companies, or maybe investors might be expecting for a more ambitious or bigger revenue guidance. Better than expected delivery of 16,500 to 17,000 units, which only represent 100.6% to 106% from the same quarter in 2019, while having a total revenue of just $921.8 million, to increase by 119 to 126% compared to the fourth quarter of 2019. Come to rescue for eventual downside below $40 are quick upgrades from analysts like Credit Suisse having new price target of $60. Deutsche Bank and JP Morgan had raised their respective price target to $50. But the biggest save of the day is the NIO's newly found bull in Bank of America, who upgraded the stock price from $23 to $54.70, which represents a potential upside to 21% from the closing price of $45 as of November 18, 2020. Bank of America says that NIO's fundamentals have bottomed out, demonstrated by improving volume sales and margin. NIO's improving product quality is supported by the 100 kWh battery pack and 20 kW DC charging pile or destination charges. Also, the third model, EC6 and new ES8. It is achieving faster than expected sales channel expansion and strengthening brand equity. I agree. Aside from increasing its sales, NIO had improved its fundamentals significantly, having an increasing gross profit margin from 8.42% last quarter. It is now 12.94% in Q3 compared to negative in 2019 of the same period. Meanwhile, brand recognition has been fast-paced, as William Lee said on the call that as of November 2020, their community of owner volunteers had grown to 3,101 from 118 cities across the country in their showrooms, car shows, live platforms, delivery centers, and particularly the NIO Days. This is big, as the company don't need to spend much on every marketing activity or every public relations it will go. Often, the word of mouth is more effective than the expensive traditional or social media marketing. It has been reported before that NIO's customer referral rate is 62%, 62. Imagine that, 62% in the first half of 2020. As a result, NIO had able to reduce their selling, general, and administrative expenses to 940.3 million RMB in Q3 compared to last year's 1.1 billion RMB. While the research and development is surprising as it decreased to 590.8 million RMB from 1.02 billion RMB during Q3 of 2019. I am surprised because they able to manage effectively their cost-saving measure when their sales is increasing. Moreover, NIO management had effectively managed their share-based compensation, which is 49.2 million RMB. Imagine a decrease of 30.1% compared to 2019's Q3 of 70.4 million RMB. That is huge. It just means to us that NIO's owners and executives are not looking to be wealthy. That is, taking advantage on the current upsurge of the stock's fair value. In spite the fact that they have to be rewarded on the company's excellent operating results, cost minimization, and reduction to employees' headcount. They don't take advantage on it. In addition, one thing that many people or analysts may overlook as well is at their earnings report, they had redeemed an equity interest in XPT from minority shareholders, in which NIO had redeemed a total of 21.09%. And now, indirectly owns XPT, who mainly designs, develops, and manufactures electric motors, battery packs, and other smart electric vehicle components. This interest gives NIO a significant ownership. Henceforth, they are going to account this investment at equity method, having them the share on the company's net income, giving NIO a value proposition as AV sector evolves. Moving forward, William Lee Ben during the earnings call said that their next model is going to be a sedan. The first sedan will be powered by NP 2.0, which is expected to be EE7, to arrive with Level 4 autonomous drive technology. This could be mass-produced in the fourth quarter of 2021. Although there is no assurance yet what is the name of their sedan's flagship until NIO Day on January 9, 2029. But I believe that it can give Tesla's Model 3 a run of their money. It could increase NIO's delivery in units, therefore could contribute higher contribution margin. With that, higher gross margin for NIO in years ahead. Like the Bank of America had said, which I agree, NIO had strengthened its fundamentals than ever by having cash and cash equivalents of $3.2 billion, while their current ratio is 2.42:1, which is higher than Tesla's 1.63. Remember that the ideal is 2:1. Meanwhile, debt-to-equity ratio of NIO is 2.52:1, while Tesla has 1.6:1. So it's just a trade-off between liquidity and solvency for NIO and Tesla. Anyway, these ratios, the ratio of the two companies is good. Furthermore, retail investors can expect no more dilutions to come, as being said during the earnings call that they have a lot of cash to continuously fund their growth. So there will be no secondary offering, at least at the short term. Finally, the most awaited response of the CEO and Mr. Steven on the question being raised on China-made Tesla's Model Y and about their international expansion plan. William Lee said that Tesla had cut their price several times, being the latest is last October by 10%, in which they don't see any impact on their orders, as they have their own competitive advantage. Therefore, the competition lies on Tesla's very own Model 3 and Model Y. So these remarks just responded impliedly to the research of Citron last week, claiming that NIO is risky because on the decrease of Tesla's price. But NIO has lot of advantages over its peers, namely BaaS, the battery as a service subscription. First, in-car AI and Nome, their destination charges, which actually these two, BaaS and destination charges, remove the anxiety of long travel. Their home court advantage, that gives their NOP, navigation on pilot, the edge on China's traffic condition. Customer loyalty as being seen on their referral rate. The use of OEM, the outsourcing of their manufacturing, which is being done by Jack. It enabled them to scale at fast-paced environment, leading them to focus on research, design, and technology development. So, is NIO stock still a buy after Q3 ER? Are you going to hold or sell, then buy the stock to its dip to as much as $25 as Citron is projecting? If you had watched my video before, you have known that I had 1,000 shares since started investing last April. I won't be selling until the share price would reach to $80 or after NIO Day, whichever comes first due to personal needs, but only 40 to 50% of my exposure. Analysts have been bullish on this stock, so I hope that JS would follow them anytime soon. To date, per Fintel.io, the stock is being owned by 518 institutional investors for 544,845,992 shares. That is amazing. Or 50.37% of NIO's outstanding shares. In short, in my point of view, the stock price that we have right now is being supported by these institutional investors. Therefore, dropping to below $40 may not happen unless bankruptcy issues or significant manipulation would happen. But can you time that manipulation? So better hold your position, buy the dips if you have some extra cash, or sell your stock if any, or if you want to sell to any level which is your target selling price. But selling for the purpose of buying the stock at a lower price is quite dangerous, and I will not advise you to do that, guys. Personally, I will hold my stock long term for the remaining one because I like this stock and I know that it will grow further. So if you want to have more videos on this, please click that subscribe button and click your notification bell so you will be kept updated on new videos that I'll be doing. Always remember that I'm uploading a video once or twice a week.